Okay, hey everyone. So today I just wanted to talk to everyone about a niche area of finance that not really too many people know about. So I thought I'd make a YouTube video on it. And so I'm going to be discussing a niche type of finance job. I guess maybe it would fall under asset management, which most people refer to as private markets or LPs, limited partners, investors. So I'm going to discuss what that is today. It's a really high paying job, a lot of good exit opportunities. And so let's jump right in. So what is private markets? So private markets are generally investment groups that are making investments in funds rather than actually like a private equity firm buys a company. These people are investing in that private equity firm's fund. So they raise a fund. The limited partners are essentially investing in a blind pool fund that these private equity managers then go out and invest in direct companies. So this could be private equity, it could be credit funds, it could be venture capital funds, it could be hedge funds, it could be private real estate funds that are buying real estate. They're just raising funds to buy real estate. And so I'm going to go over the three things that private markets groups generally invest in. And so they're generally making primary commitments for the most part. So that's investing directly into, instead of investing directly into a company like I mentioned, that's investing into a blind pool fund that I'm just going to use private equity as an example, that private equity firms raise. So let's say they're raising their third fund. It's a $300 million fund. They're looking for, let's say, six limited partner investors, so $50 million from all six of these LPs are going to invest in this fund to make that $300 million fund that they're going to go out and then buy companies with. So that's a primary commitment. And there's co-investments. So this is where the general partner, so the managing partner of the private equity firm, they ask the limited partner, the private markets group, if they want to actually, they're already usually generally invest in the fund. Sometimes they're not, but they'll be like, hey, do you guys want to co-invest in this direct company with us? We won't charge you fees because if you invest in these funds, you're paying a management fee to the private equity firm, and they get 20% of the carried interest generally. So on average, 20%. So 2 and 20, it's pretty typical. Most people know about this. And so if you're doing a co-investment with the private equity firm, you're not even paying these fees. So that's more of the reason they want to invest directly in the company. It's not blind pool risk. You know what kind of company you're investing in. Sometimes they're using like the actual private equity firm's underlying due diligence and just going off that, and they're not really conducting their own due diligence. Maybe they'll go on site and meet with the CEO of the company before doing the investment. Sometimes depending on what type of firm, but that's kind of how what a co-investment is. And then there's also secondary investments or secondary transactions. So that's when you're either buying or selling portfolios of funds and co-investments that are already in their investment cycle. So let's say it's like 5 years into a fund's investment life, and let's say a pension fund wants to sell off a portfolio of a bunch of different funds and co-investments that they have because they need liquidity or something like that. So that they sell it and you be the buyer of that portfolio of secondaries, or you can do it like just a normal like if someone wants to sell one interest in a fund. And it's into their investment life, and you buy the secondary. So they're usually buying at discount to NAV, obviously, so that's what secondaries are, and that's another thing that private markets groups invest in. And so these are the types of private markets investment teams. So there's pension funds. So these people are investing on behalf of the pensioners' capital. They're usually like big corporations. They have their pension, they have a private markets team, they have an equity team, they have a fixed income team, and the private markets team is obviously investing in funds, co-investments, secondaries, generally at these pension funds. So the pension fund's a really good job. You're working generally for a corporation, so it's good pay. Then there's endowment funds, which is a university generally. So let's say like Harvard, you can work at Harvard and work in their endowment office, and you would be investing in funds. Generally, they might be doing investing in direct companies, but I'm sure they're investing mostly in funds and co-investments and secondaries, or let's say like University of Michigan. Their investment firm, their endowment fund is they're investing in funds, primaries, secondary types of investments. So another good job. There's family offices, so these are firm like high net worth people who start their own firm and then they hire people just so they can kind of come in and invest in funds. Sometimes they'll buy companies, like not even do co-investment. The different family offices do different things, but a lot of family offices are doing mostly primary commitments, co-investments, and secondary type stuff. So that's family office, and that's depending on the family office. That's another potentially good high paid company, high paid job. And then insurance companies. So it's another good one. They're like more so balance sheet investing, so they have a ton of money, obviously insurance companies, and a lot of big insurance companies have actual private markets groups and asset management teams in-house that are investing the capital on behalf of the firm, and so they're doing a lot of like fund investments, and sometimes they have people who are doing, direct investments or co-investments in companies and secondaries and stuff like that. So there's a lot of the bigger insurance companies, or most of them, have private markets teams, and it's pretty interesting. Not a lot of people know about that, but they're another high paid job. Or private equity firms. So obviously, private equity firms, some go out and raise their own capital to go buy companies, but other private equity firms raise their own capital to go out and invest in funds. So there's a lot of different types of fund to funds, private equity firms in the market that you can kind of look up, but um, these are it's just a normal private equity firm. They charge a management fee. They charge, they they take carry, and they're raising their own capital, and they're kind of going out and buying or investing in funds and investing in co-investments with other people's capital. So it's pretty interesting. And even some, pension funds will raise their own like separate funds and stuff like that, and family offices will raise their own funds outside of the family capital, but there is real private equity firms that just focus on those types of fund to funds. So that's another thing. And then there's state investment offices. So let's say like California State, one of their you can go work for the state of California, and they invest in funds. They invest in private equity funds, probably all throughout California, mostly, and they do co-investment stuff like that. I would say this is like one of the lower paid ones in this industry, just because it's government. So if you want to work at a state investment office, it's really good experience, and you can exit to one of these other things that I mentioned before, but it's generally lower paid. And then there's like, I actually didn't write this on here, but there's like teachers funds, like teachers retirement funds, that can get pretty big, like $30 billion, and they're just literally just investing in funds, co-investments, and stuff like that. So like CalPERS, like California Teachers Retirement Fund, or California, I don't know what it stands for, but it's like a teachers retirement fund in California. I know that. So there's other groups, and I'm not really, to be honest, sure how high they pay. I would guess it would probably be these two would probably be on the lower end for types of private markets rules, but I really don't know about the teachers retirement funds because it's technically not government. So I don't know. But and then there's asset management groups at banks who are actually investing in funds as well. So this is super niche, and obviously it's another high paid one, but they are like the Goldman Sachs Asset Management Group. I know there's like a private credit group that invests only in private credit funds. I know that they have like different types of, like all these firms have different asset management divisions that are super niche and basically investing in funds and co-investments and doing stuff like that. So, the day to day, so what you would be doing, and this is as an analyst, I'm just talking starting because most people who are watching this video are kind of looking. Well, honestly, as an analyst, you do a lot of really high level work, so this could even be like a senior analyst type job, portfolio manager, but you're sourcing new investments, you're maintaining a deal pipeline, so you're always getting all these decks across from different funds and different co-investments, and you're putting them into the pipeline, maintaining that pipeline. Traditional, same thing as at a direct private equity firm that's maintaining a pipeline of actual companies. You're doing due diligence on the investment opportunity, so you're looking at the track record of these funds. You're looking at if it's a co-investment, looking at the manager's projections and financial models. You're looking at the underlying portfolio companies, teams' backgrounds, and stuff like that. So you're also conducting a lot of reference calls, so this is pretty interesting. You talk to, I mean, almost every day in this industry, you're talking to general partners, CEOs, executives of the underlying portfolio companies, other LPs in the industry who are looking at these funds and kind of conducting their own due diligence. You're talking to deal advisors, so that's investment bankers that are advising on these deals and working with these private equity firms and private credit firms and venture capital firms on these deals and underwriting them. So you're talking with all these people on a daily basis when you're looking at underwriting an investment. So and then you're executing on the like some sort of investment process that the firm has in place generally. So that it depends on what firm you and how you're working and what high level exposure you get. But an analyst at some of these firms are doing legal negotiation or talking with the legal. You're creating investment memos and write-ups, and you're looking at the firm economics. So looking at the salaries of the all the employees within the firm, the carried interest breakdown, how much carry they're earning in the funds. How much money they're generating for the management fee of the firm. And then there's operational due diligence. So that's a lot of like back office related due diligence. Some firms have actual like operational due diligence teams that come in when you're going to invest in a fund or a co-investment and kind of conduct their own. Some people do it in-house and have questionnaires that they send, and they get all this back office information on IT, all the portfolio management systems, and all just whatever types of questions that accounting questions, accounting related questions, stuff like that. So that's some of the day to day, not everything obviously, but that's just some of the day to day. So it's pretty similar actually to like a traditional private equity role, except you're not investing in companies and I guess the due diligence is less intense. But so some of the advantages of working in private markets. So you're working significantly less hours than investment banking and very similar pay. So it's a typical bonus structure and salary structure. I don't know how some of the other firms pay, but from other people that I've talked to in this trade, it's pretty similar, I would say. This pays pretty close to like if you're starting as an analyst at a private markets group and you would be like a private equity analyst at a private markets group, you're making the same amount of money as an investment banking analyst starting at an investment bank for the most part. So another advantage is you're getting direct exposure to managing partners and executives at large investment firms. So different whatever types of strategies you're pursuing. So private credit, private equity, venture capital, hedge funds. You're getting direct exposure to those managing partners because you're not going to invest in these funds without talking directly with them, meeting directly with them. So you're always talking with these managing partners. You talk a lot with the CEOs of the underlying portfolio companies or stocks or whatever, the real estate properties or whatever. You're talking with other limited partner investors, so these are other people that are looking at these different funds and co-investments and deciding if they should invest as well. You're talking with them and seeing what their thoughts are. So you get a lot of super high level exposure, especially even at an analyst level, even more than I would say in investment banking. I haven't worked in investment banking. I've just know people that have and have friends in it, so that's I'm just coming from that type of experience, but I have worked in private markets, so that's kind of where I'm coming from. So, and also you're at the top of the food chain, so you're the investor in the private equity firm. You earn most of the carried interest. You're the shark. You know, you these private equity firms are always willing to talk to you because you're their investors. Like these CEOs of the underlying portfolios are always willing to talk to you because they're being funded by the private equity firm who's being funded by you. So you're at the top of the food chain. So everyone's willing to talk to you. Everyone's nice to you. People will try to send you gifts. There's a lot of compliance rules. You can't really accept them, but people will try to send you gifts, all that. That's just how it is. You're at the top of the food chain. Um, and it's not a very intense job, and I'm just comparing this to investment banking. Depending on the firm that you work at, the due diligence is less intense. Like I said, you're at the top of the food chain, so mostly you're kind of sometimes on your own timeline, depending on the fundraise. So it's pretty good. It's a pretty good job. It's super niche. So some of the disadvantages is you're gaining less quantitative analysis skills than you probably would in an investment banking role. You're not building these LBO models. Some firms are when they underwrite co-investments. Depending on what firm you work at, you may be doing this. So correct me if I'm wrong, but you're really not. That's not what your main job is. You're not building LBO models. Due diligence isn't as tense. It's not as stressful. There's not these crazy strict like timelines. If you're on a live deal, you're not working till 3 a.m. It's never like that. It's not how it is at all. The exit opportunities are different than a traditional investment banking private equity career path. So hang on, I'm gonna have to pause this video and start a new one because I am at a 15-minute mark. Okay, sorry about that. Using a screen recording software. So I think I last left off on the exit opportunities and just mentioned that they're different than traditional investment banking, private equity, career path or exit opportunities. So I'll talk about that more on the last slide. So the salaries and hours. So like I mentioned before, most private equity groups this is just like coming from off the top of my head, but I'm probably right. I would say they work on average 50 hours a week, probably. So the pay is like investment banking with the salary and a bonus structure. The pay, like the bonus, could be based on the underlying investment performance, depending on what type of firm you're investing or working at. If the firm's kind of raising their own fund, they may let you invest in the fund and get carried interest, like a traditional private equity firm would. Um, and I would probably say that the starting salary is like 80 to 90, probably anywhere 40 to 80. That's just a range, like that's a guess. It could be more, it could be less, but as you can see, it's probably pretty similar to investment banking. I think I mentioned this before, but much less intense and less demanding work. The timelines can be tough, but they're not as bad as working on a live deal in investment banking, from what I've heard, and I'm from what other people heard about investment banking. So. Um, for the exit opportunities, I guess the ideal path would probably be to continue on working on the investment side until you can kind of gain your own track record of investing in funds or doing co-investments or doing secondaries, and then maybe raise your own capital, like in the road. Maybe if you've been working in the industry for a really long time, you're a managing partner at a firm, you want to leave and start your own fund. I've seen people do that firsthand, so that's definitely possible. I've seen multiple people do that firsthand, so. So that's like a normal traditional private equity path without going through the investment banking training program and doing all that crazy stuff. It's like you can kind of get into private equity really. Essentially, that's what this is. You're getting into private equity without going through crazy investment banking career path, and you're still getting the same pay, less hours. So there's a lot of positives. Some people exit and go work at investment banks as placement agents. So a placement agent, I don't know if anyone knows about what this is, but they're generally like the private funds group you'll see at these investment banks. So you're an investment banker. It's really a demanding job. So you're helping these private equity firms or private credit firms or venture capital funds raise their funds from limited partners investors. So that's your serve as the middleman. You're creating all their marketing decks. You serve as, I guess, the point person on the deal as an investment banker, or an investment banker, but a placement agent. So you're traveling a lot. It's an insane amount of traveling. If pre-COVID, you're meeting with a bunch of people face to face, LPGP, meeting with all the limited partners and general partners, and kind of serving as the middleman. You don't really talk as much in the meetings from what I see. You kind of just introduce the general partner, you introduce the limited partner when you sit down in the meeting, and they kind of talk to each other. So it's an interesting job. I mean, I'm not going to knock it. It's high paid for sure, really high paid if you like that, but it's intense. It's an investment banking job, a lot of travel. So some people even make the jump to direct private equity, or like a corporate development at a company or like M&A, if they get enough co-investment exposure generally. So if you're working on a ton of co-investments and you're actually underwriting these deals and kind of building your own models for these co-investments, you might even be able to make a move to direct private equity firms, even if you're not getting that experience. If you can kind of twist your story, I've seen people do it, like make that move into just a private equity firm that's making traditional investments or just buying companies. Like, how do you think instead of investing in funds and doing co-investments and stuff like that, they're just buying companies like a normal private equity firm? Some people even have the opportunity to make that jump if you want to. Some people go into investor relations at private equity firms. I guess there's a good connection there just because you're working still a lot with limited partners if you're in investor relations at a private equity firm, so there's a good connection. And I've seen people make that jump. Or some people may not like the fund of funds job. I mean, I don't know. Some people might want to get more of that technical experience, that quantitative experience, that really deep fundamental analysis types of experience that you get in like an investment banking program. So they might want to go into like a normal investment banking job. I mean, it might not be super easy, but I've seen people do it. It's not impossible. Maybe not at a bulge bracket bank because they're hiring usually out of college for analyst roles, but I mean, middle market firms, I mean, you can definitely twist your story and get into an investment bank if that's really what you wanted to do, coming from a like a private equity fund of funds or any general private markets role. So I didn't make a slide on this, but how you can kind of get into the industry. There's a few different ways. I mean, people say don't apply to things online. Like apply to everything you see online. If you're still in college, like trust me, just apply. Even if you see like private markets jobs posted at different whatever, even if it's a state fund and it's not as high paid, you can take that job for 2 years, switch to yeah, a pension fund or switch somewhere with that kind of experience. So even if it's not that high paid, you can get into a state fund, or you can find pension funds that are hiring for these types of roles. They're kind of rare. Maybe you see them on LinkedIn. Just apply. Asset management firms that are doing fund of funds investing. All these different things. You'll see a bunch of family office roles on LinkedIn that if you make these connections, just reach directly out to them. Say, hey, I'm interested in fund of funds. I think it's a super niche industry. I'm interested in private markets. You see a bunch of insurance companies like MetLife, like I don't know, AAA, like whatever. They all have private markets groups, you know what I mean? So you'll even see private equity firms who are looking for, I mean, maybe an analyst. Sometimes you'll see that at these fund funds. So just look around, try to make that. It's the same kind of thing, like as investment banking or private equity. You just try to build those connections, reach directly out to them, set up the calls, apply to everything you see. If you're in college, just do whatever you can to kind of get a job. But this is a really good industry if you end up landing in this industry. So, yeah, this is my video. If anyone has questions, feel free to send me a direct message or comment below on the question. But yeah, like and subscribe. I appreciate the time. Thanks, everyone.